Good morning, y'all. I'm Catherine Ross here with Jim Cramer. How are you today?
How was your weekend?
It was great. How was yours?
Well, the Eagles lost, so therefore bad.
But it looked like you were having a great time at the game.
Until the fourth quarter, indeed.
Yeah. All right, so Jim, this morning, I mean, all of the indexes are down. How are you feeling about the market?
I think that actually with our bond market closed for the day, we can mount a rally. We are really just dealing with this carryover. So China's down very badly, and Europe's down very badly, including Italy because of a spike in rates. And then it just comes over to our country. What happens in the end? Very interesting. What happens in the end is because our bond market is closed, so therefore rates can't go up. People realize, hold it, maybe we overshot to the downside. I also think given the fact that the PepsiCos of the world are moving up, what that might indicate is there's some people, and the REITs, some people who think, you know what, maybe rates have peaked for the year. Now, I don't know. There are other people who say, oh, give me a break. The bond market was closed. Who knows what's really happening? It's a very murky moment.
That's totally fair. Okay, so you had a really interesting column on Real Money this morning on the slowing job growth in these once great...
Yes, thank you for asking, because here's the problem, Kathy. People look at an aggregate number, and they just say, wow, best since 1969. One of the things that I've learned in my career is that you have to be more granular than the top line. When you look at the actual areas where the economy is still producing jobs, it's producing jobs in white collar. Now, that's okay. White collar, for the most part, is that people who are doing well. The people who are not doing well or trying to do well or strivers, all of their areas were not doing well, particularly construction, which is loan growth. It shows you the loan growth may be anemic. Healthcare, thank heavens, our healthcare course may finally be reined in, which is very good for inflation. We're not looking at where inflation has been in the system, which is healthcare. Okay, that's the big inflationary thing that we have not been able to control. Maybe why the Federal Reserve raising rates, they can continue to crush housing and continue to crush auto, and then maybe some of those workers can go from another area. But that is not a sustained way to break inflation when inflation is non-existent because of digitization. Is our country really controlled by are we controlled by Amazon raising what they pay workers? How about if they end up making it so that there are far fewer workers in the country, given so much of the digitization, including a checkerless society, 3 million people. 3 million people are checkers.
You mentioned specifically Ford, which is the real money stock of the day.
Yeah, which means, again, wall-to-wall coverage, and I think people have to recognize when you look at Ford, it's the profitability that's under question. Now, people are very concerned about Ford's yield. They're concerned about the safety of the dividend. The family does not want that dividend cut. The company does have a lot of cash. But the problem here is that they have to close everything that they're not profitable in. Ford has to become a small company. Now, Catherine, the family has never wanted Ford to be a small company, given the fact that the legacy of Ford is to be a great company worldwide. That's not working. In the new economy, Ford's not working. So I say, don't buy Ford. The stocks that are going to have, Ford will have year-over-year declines in earnings because their profitability is so poor. So I want people to be careful for it.
So on Friday,
yes,
you sat down for Mad Money with the Cloudera CEO. Now, Cloudera and Hortonworks are working on a merger right now.
Right. Now, this is about Oracle. When you have two companies that merge in the cloud, these are cloud-based companies, and they own certain areas of enterprise software, they are up against Oracle, which has both a cloud business, which is actually not growing like Amazon's or Google or certainly Azure. And so you can take them on. And they have taken them on. And I think this merger, the reason why these two stocks are up is that, these two companies have been battling each other for years. It's a remarkable thing. They got together. And I didn't think it would happen. So you've got two companies that, when you have two companies that have been fighting it out for market share and they get together, that's a good reason for a stock to go higher. Cloudera is a good stock to own.
So I really want to talk to you more about the cloud, but I'm going to save that for the Action Alerts Plus video. One last question for you. Are you excited for your teach-in, which is this Saturday,
October 13th?
Well,
take a look at Constellation. Constellation Brands reported an amazing quarter last week. From here, it's about merging, because they will be owning the majority of, with Canopy. So if you have the beer business strong, which is something, by the way, that Rob Sands said would happen, he's the CEO, and then you have Bill Newlands coming at our conference, the president, speaking directly with Bruce Linton, and please go to Canopy, both to see what they have for Sativa and what they have for Lyrica. What you're going to be surprised to see is a worldwide dominant company in cannabis, also known as marijuana, also known as weed. Their product's called Tweed, also known as pot. If you haven't signed up for this conference, or maybe I think we're going to try to do some sort of video after, but you got to be there. Of course, pictures with me. Basically what I'm saying is you do not want to miss our October 13th teach-in.
And I cannot agree more.
You'll be there, right?
I will be there.
Fantastic.
All right, guys, that's a wrap for today. Please join us tomorrow. Bye.